Hey everyone, welcome to the Trash Puppy channel. I'm your host, The Download. This is a channel where the stars meet the stocks, celestial cycles influences stock cycles. Today we're talking about one of the most talked about stocks right now in the semiconductor and small cap space, Wolfspeed, ticker symbol WOLF. This video is especially for those of you that have lost money on Wolfspeed or are looking for ways to triple your returns on this investment. Plus, we'll cover why Wolfspeed is at the center of one of the biggest lawsuits in the semiconductor industry. So let's get right to it. Right now, Wolfspeed is trading at $9, under 10% from where they were previously traded yesterday. This drop is attributed to, I believe, dollar cost averaging. Myself also bought Wolfspeed at $14 right before the earnings call, anticipating it to go to $21. Instead, it dropped to $6. So if you dollar cost average down, the exit point was $10. So I believe yesterday when the price peaked around $10, there was selling for investors that recover their losses. And for those investors, good for you. My personal philosophy is never throw new money at a dog. That new money could be it can be invested into other financial vehicles, including cryptocurrency, and a couple that I really like. I'll talk about in other videos. Now, I'm still bullish on this stock. They make a product called silicon carbide. That's what they specialize in. Silicon carbide is a transistor that's used in a lot of semiconductors, electric vehicles, AI chips, and more. It's more durable, it's heat resistant, it's more efficient, it transfers more information, takes less energy. It's a fantastic product. Okay, so why is the stock struggling? Is it because of the financials? Well, let's take a look at their financials. Their financial shows very strong growth year over year. Starting in 2021 at 525 million and growing to 760 million last year to around 800 million this year. So on track to be a billion-dollar company, and that's quite a milestone for a small cap company. Now, what kind of drew my attention, however, to possible reasons for the recent decline in their stock is around the cost of revenue. So their cost of revenue went up this year. Most of it's in research and development, or some of it. Excuse me. So this piece tells me that this is their investing capacity for the future. So they made some capacity investments that hasn't been utilized and had to shut down some plants, and that's the reason for a lot of analysts recommending a hold on this Wolfspeed, but I'm still very bullish on it. Here you'll see some costs around restructuring mergers and acquisitions, and I believe this slide here on the P&L really tells a lot of the story. And let's just go to the balance sheet because they have a very strong balance sheet. So I believe it's because of the exiting leaderships at the company, including their CEO, Greg, which we'll talk later. But if you look at their balance sheet's very strong, total assets. I always like to look at the burn rate, see how much cash they have on hand. And they have plenty of cash on hand. So let's look at close to $2 billion. So let's look at the cash flow and what happened this year. And I think you'll, oh, well, there you go. Operating cash flow so every year it's around 100,000, 100 million, 100 million, 100 million. This year all of a sudden 500 or this 725 million. So this is due to a lot of restructuring costs that included a 20% layoff. And like I said, Greg Lowe, who left the company as the CEO, he left with around $12 million this year and around $15 million last year. So altogether, this guy made out with $30 million. Good for him. But it leaves stock investors like myself feeling burned, especially with news around investing in capacity and not fulfilling those capacities. On top of the allegations around the capacity issue and not utilizing them and they also have issues around slowing demand in the EV market. But still, I'm still very bullish on the stock because silicon carbide is not just for electric vehicles. It powers everything. It's in your phones. They use it for the AI chips that Elon Musk is buying a ton of for his company, ChatGPT. So I believe there's tremendous growth with this stock. It's extremely undervalued. And it's the short sellers that are insiders that are really manipulating the demand and supply of this particular position. And I would love for us investors, everyday investors like myself, that needs to put money on the table for our families just to get together and buy the stock up. I like the 2025 expiring option. I believe it's very attractive and it's good for some quick returns. Please subscribe to the Trash Puppy channel. If you like my channel, if you made money, if just give me a subscribe, give me a like. Talk to y'all later.